We've been talking about unforeseen sky, so our first moderator will be replaced. So Robin, don't run away. I need you. We need a new moderator. Because we're going to talk about how we can dissect the European VC landscape. And we have great speakers that will join for this panel. And let me briefly introduce them to you. Ricardo Schäfer, partner at Target Global VC. We also welcome Deepali Nangia, who's a partner at Speedinvest, and Cleo Sham, who's a partner at Stride.VC. So we are ready to dissect the VC landscape with the three of you. And please give them a warm applause. Seats are ready.
Thank you so much for joining. There's this expression in English, break a leg, when you wish someone good luck. Michael Cogley was supposed to moderate the session, actually broke his leg yesterday. So he's stuck in London for a good reason, so we'll forgive him for that. I'm taking over the panel, which I'm super excited about because I love talking about VC and I love talking about Europe. So that's what we're going to talk about now. You got a very brief introduction, but maybe you can do a little bit better, like a short bio. Deepali, you want to
Sure. Thank you for having me. And Saul's a very hard act to follow, so I'll try my best. But I'm a partner at Speedinvest with a focus on female and diverse founders. I'm also co-founder of an angel community, which I set up pre-pandemic with 3 others. We set it up to create the next generation of female angel investor. We're about 350 people, 70% female, 30% male, and have invested about $5 million into female founders over the last 18 months.
Great elevator pitch. Cleo.
Hi, everyone. Yeah, thanks for having me here. I'm Cleo, partner at Stride.VC, a boutique London-based seed fund really focusing on investing in the early stages. We're non-thematic, so we're generalists and really focused on kind of taking an operational approach and helping founders with company building. And before Stride, I was at Uber for 4.5 years and also operator, and at a growth stage startup called Spot a Home as COO.
You make it sound so easy. She built Uber China, and then she came over to EMEA to build their operation. Super impressive. Can you lower your microphone just a bit, Cleo? Just a little bit. Thank you. Ricardo.
Hey, Robin. Hi, everyone. I'm Rick, partner at Target Global. We are a pan-European stage-agnostic fund. We have an early-stage fund. We have a growth fund. We're spread out across a couple of offices, Berlin, London, Tel Aviv. And we invest anywhere between kind of from 500K up to 20, 30 million in our growth fund. And I'm very happy to be here.
Thanks for joining. OK, let's kick off. You heard Saul Klein talk about the next 20 years are going to be the best Europe has ever seen. Do you agree with this? I assume, because as VCs, you have to be optimist. But why? Can you articulate why? Cleo, maybe start with you.
On why we're bullish on the...
Why are you bullish on Europe?
Yeah, as Saul mentioned, right, Europe is the home to a lot of primary research and really strong academia, and we've really seen the ecosystem blossom over the past few years. And now, as a founder, you've got so much choice in terms of where you can find capital, right? Be it local European seed funds like ourselves, and then also there's American venture funds that are setting up shop in Europe, the likes of Sequoia, Lightspeed. And as a founder, there's just a lot more access to not only capital, but also knowledge and sector specialist expertise. And obviously, there are funds like Momentum in fintech or Paradigm in crypto, right? So in terms of learning and access to networks, it's just a much stronger landscape than it's ever been.
Ricardo, I'm guessing you subscribe to that as well.
So just to understand the question correctly, why it's now a good time?
Why are you so bullish
to start a company in Europe? Yeah. Look, I mean, I think there's just generally more talent around than it was 10, 20 years ago. Kind of more experienced operators, obviously also more experienced founders, second, third-time founders, people that work kind of management layers at now big platforms, companies that got listed, and now you see kind of people kind of starting their own companies. And then, of course, there's the capital side, as you described, right? There's not just early stage, but particularly on the late stage side, right? That allows kind of companies to stay longer private. And so I think that's a must now that public markets are shut. I think, thirdly, I'd say, back in the days, it was kind of important to start your company in one of the hubs and with kind of more talent and more capital and also kind of the shift into kind of remote work, it's just easier to start a company from anywhere in Europe, right? So, yeah, I think.
So much positivity and so much optimism. But Deepali, I also want to hear about the problems that we're still facing.
Yeah, I mean, obviously, diversity is the big challenge, which is what I work towards. We females are 50% of the consumer base, but still receive very little venture capital. And diverse founders the same. Valuations, we're talking about valuations. They tend to receive much lower valuations than most mainstream founders. So that is definitely a challenge. But I've been working with women for the last 8 or 9 years. I've seen a huge shift that is changing. I am seeing more and more women trying to build large, scalable businesses and also getting financing, although at a much slower pace. Speedinvest brought me on with a focus on female and diverse founders, and I think it's the only fund in Europe. I started as a venture partner, and now a partner just focusing on that. Then obviously there's the valuation question, which is very topical at this point. I still feel there's a lot of money in the market, so I'm not really seeing pre-seed and seed valuations come down yet, but that will also change. But having said that, there'll always be good entrepreneurs getting funded at good valuations, so a little less concerned because we're really in the long game.
Perfect timing for a quick plug. There's going to be a session on diversity and inclusion, moderated by myself on the other stage after the break, so if you're interested in the topic, please join us as well, because it's a massive problem indeed. You mentioned startup valuations. That's an obvious one because there is pressure. When we started organizing this conference back in December, January, the world looked a bit different. So there's a lot of pressure on entrepreneurs now, especially the seed stage. There's talk about valuations going down rounds, investment stalling or even freezing. So what's going to happen next? How long is this going to be the case? Cleo?
Yeah, I guess we've all seen the news, right, in the public markets with rates going up. Growth valuation multiples have really started being compressed. And I think, obviously, there's a lot of pain in the growth stages, but in the earlier stages, say, not even early, but Series Bs and Cs, I think that's where it's quite challenging at the moment in that, strong companies are obviously still able to raise, but price discovery is really challenging. It takes maybe quite a bit of time and a bit of trial and error for founders to figure out how much they can raise, because there's a bit of a mismatch in expectations between founders and investors at the moment. So that whole process may just take a bit of time to sort of figure out in terms of where prices are going to land. And in the earlier stages, I think really it's about company building, it's about being kind of disciplined on cash expenditures and really delivering value to customers in a way that, companies can no longer hide behind large rounds and high valuations. There needs to be real product market fit, and there needs to be real value being offered to the market. And I think that's where we're really spending time with our founders, right? Focusing on strategy, focusing on planning for the next round fundraising, looking at runway, hiring the best talent, but increasingly being a bit more disciplined and cautious around cash and burn.
Yeah, I hear that quite a lot, but of course, things were a bit crazy, right, for a while. Maybe also buoyed by the pandemic, I don't know, but things were really getting out of hand here and there. Yeah. Certain companies, certain industries that were really overheating, I would say. Ricardo, do you agree with that?
I mean, it's in a way we almost anticipate a bit of a reversing of what we've seen over the last 2 years, right? I mean, I remember the conversations back March 2020, and people talked about the kind of RIP good times, and the exact opposite came into effect, right? And I mean, we're similarly, right? I mean, we're telling our companies to kind of prepare for at least up to 24 months runway and expect no more funding. Having said that, I think the good companies will continue to attract capital. I mean, the funds still have capital, even though they might extend a little bit the investment period. And I think on valuations, in early stage, I mean, really they're more an effect of kind of supply-demand dynamics, or competitive dynamics, I should rather say, right? So good founders, good models, companies with good unit economics or kind of attractive growth metrics, they will continue to raise at, I think, good valuations. At later stage, that's obviously then, I mean, early stage is more decoupled from public markets. I think later stages, then it's hard to kind of ignore what's happening in terms of kind of also valuations and multiples on the public side, right? So definitely we'll probably see some kind of adjustment there. But I don't think everything is completely gloom, and there's still kind of also on the growth side funds with very deep pockets, a lot of pension funds, a lot of also kind of new entrants. So yeah, we'll see. But I think it's prudent to extend your runway and maybe think about that top up or that additional convertible. Any founders in the room, please talk to me. But yeah.
Great. Deepali, anything to add to that?
Yeah, I was going to say there's still a lot of money in the market. We put out a term sheet on something on
So
Friday
much money in the market.
at 10 million, and on Saturday it was trumped by a 20 million valuation. So there is still a lot of money in the market, and sometimes irrational money, to be honest. At Speedinvest, we tend to be quite ownership-driven and quite conscious about valuation. So I personally have, last year turned down a few deals where we couldn't get to the valuation. So, but there is still a lot of money in the market to play out. But there will always be good teams and good founders, there are good valuations. There will be a flight to quality because we didn't see anything post-pandemic, and now we have the war. We have, the UK has its own issues with supply chain, and after having left EU, and we have also the post-pandemic fallout with inflation, etc. So.
I'll stay with you for a second with the next question. What are some of the industries that are currently underserved by investors? Do you think, either geographical in Europe, or what's being underserved, or also the sector?
I mean, obviously, we as a fund want to spend more time in the CEE. We're also looking at the emerging markets a lot. I was just in India for 2 weeks looking at emerging market fintech because there's a lot of financial inclusion plays, which are super interesting. In terms of industries in Europe, I've seen this huge wave of inclusive finance in Europe as well, whether it's Gen Z, whether it's women, whether it's immigrants. So a lot in health. After COVID, obviously, mental health saw a huge wave, but we saw preventative health, at-home monitoring, lots of digital health. So that is super interesting. Seen a lot in longevity. Also, old people and how they dealt with COVID and the pandemic, and how do you really help them age better. So seen some trends in longevity. So these are some of the sectors that I'm, still looking at and following closely.
Great. And from Stride perspective, same question.
We're non-thematic, so I guess we leave ourselves pretty open-minded to believing that founders are the best ones to find white space in the market. But that's being said, geographically, we've been investing a bit more outside of our core market of London. So we've made our first investments in Austria, Belgium, Southern Europe. Exciting. We led an investment in TechWolf recently in Belgium, and I'm personally super excited about that. And then I guess just paying attention to the trends that are out in the market. We've looked at the future of work, and we've backed a company called Hoffi, which is really focusing on the physical layer of remote work, like the furniture, the equipment, not so much the employment side, because we're trying to take a different take. And then we think, AI is really the biggest transformation that's going to be happening in our, maybe in our generation. And so definitely looking at a few companies there, TechWolf being one of them. And otherwise, I think, as Deepali mentioned, like in health tech, the presence of sensors these days are enabling us to really get a lot more rich data and be able to build businesses with that. So there's a lot of exciting things happening, and I think it's just a bigger dispersion across various geos in Europe now that we're looking across. Great.
Ricardo.
I mean, that's the beauty about Europe, right? That you have actually lots of different sectors that are strong. I mean, we're sector agnostic, but we do spend, equally kind of what Deepali said, a lot of time in digital health and also around kind of financial inclusion. And we're starting to kind of look also outside Europe. We spend a fair bit of time in places like Nigeria, for example, also kind of the MENA region. I mean, wherever there's kind of real problems, founders build big businesses. So though we're kind of very thematic, it's often kind of, at least we think, important to kind of have the founders come up with the ideas that will then kind of disrupt big category or kind of big sectors, big categories, or create big category leaders. So yeah, combination of thematic investing across some sectors that we mentioned, but also kind of waiting for the founders to come up with their ideas. I think it's generally a bad idea if investors create those ideas. It's actually the innovation needs to come from obviously the founders.
We only have about 2 minutes left. We have lots of investment star power on stage, so I do want to take the opportunity for the first-time founders or the aspiring entrepreneurs in the room, the single biggest piece of advice that you can give to them while they're starting out their journey from an investment standpoint. Deepali.
I mean, at this point, I would really focus on building and capital efficiency. And if you're already building, then cut down any unnecessary expenses, try and hone your business model because metrics will become even more and more important. Any female founders in the audience or diverse founders, please feel free to reach out to me. I'll be outside, would love to talk to you, whether it's money or advice, I'm always here. And always do your due diligence on the funds, I think it's very important to learn about the funds and see whether or not there's a fit, yes. What I call, because we always do our due diligence and you should always do the same, and there's always a higher probability of a match if you've done your due diligence. I've invested cold in women, but the people who then reached out to me were very specific as to why they're reaching out to me. So I think that's quite important. But always here, and I'm on Twitter and LinkedIn, so feel free to reach out to me.
Nice. It's great advice. Founders, always do your homework before you sign with an investor. Cleo. Yeah,
totally. I guess I'll first second what Deepali just said. Always do your references on the investors, and from founders who they've backed before, and see if they're really as supportive as they say, right? And secondly, I think in this market, especially, have patience to find real product market fit. I think quick iteration, really understanding your customers, really understanding how you deliver real value so that you can build something that's sustainable. Because product market fit and real traction is going to matter a lot more. And then the last thought here is really just for any founder, especially first-time founder, finding a good set of mentors or people in the ecosystem who can be with you on the journey. Just because it's tough, it's lonely. So having that sort of supportive network to go with you is going to be really helpful.
Great advice as well. Rick?
I'll keep it short. So endurance, obviously. This is a long journey. Build a product that people give a shit about. Someone needs to buy it, and then work on your storytelling skills, because that's very important for all kinds of people you need to convince along the journey, right? Your investors, people you hire, your customers, press, etc., etc. So great. Storytelling, very important.
Well, thank you so much for joining us for the first Tech.eu Summit to share your insights, and I'm sure you'll stick around a bit so people can meet you later. Great. Thank you so much. It's really inspiring.
Thank you.
Thank you.